Good morning, UPBOptionMillionaires.com. It is Thursday, July 26, 2018, 40 minutes before the opening bell. Last night, Facebook's earnings really took the NASDAQ down after hitting record highs into the closing bell. The NASDAQ is down over 0.75% NASDAQ futures, but Facebook is not the market. However, it's, you expected to see one of the larger companies in the world gets smacked down over 20%. The market to have a little bit of a pullback. I think ultimately, though, just another one of those dips that is going to get bought. Look at this breakout we've had here for the S&P 500 futures. Yesterday, sharp breakout after a consolidation. Continuation to the upside is likely, in my opinion, and we're going to at least come up to the highs that we saw at the start of the year. The market looks poised to break out into the summer. If it's not NASDAQ futures rallying today, which we had NASDAQ pulling back after hitting highs, I think it's going to be small caps and it's going to be the financials. If you look here from a longer term perspective for the SPY, this is a 10-year monthly chart. Look at the breakout we have here just over this past month. You can look at small caps, the IWM. I'm looking at this from a shorter term, but you can see it's starting to break out already. The 170 level is the record high, but if you look on a shorter term, look at this beautiful cup and handle formation. I believe we're going to break over the 170, which has been acting as resistance, and the 175 in the short to medium term for the IWM. XLF is breaking out, folks. Look at this wedge pattern we're breaking out of. I think 30 is coming over the next, 3 to 6 months for the XLF, meaning names like Goldman Sachs, which have been lagging, which is also breaking out. Goldman Sachs, JP Morgan Chase, likely the new all-time record highs after holding that 105 level post-earnings. You can see it already with Citigroup breaking out. Bank of America over the 30 mark. So a lot of these financials poised for more upside. It's going to help lift the market. Despite the weakness we've seen with Facebook, people are asking, what's support with Facebook? Well, the first line in the sand is 175. You remember this line here of support that we hit after all of that nonsense earlier this year with Facebook, which has really helped take earnings down. And that's why it's down today, I believe, because it's not the economy, folks. It's the company. And the support line, long-term trend line support, has held. So if we do break through 175, you can expect to move to just under 160 for Facebook before it finds support, reverses to the upside. Some names to watch. Baba. How about Baba? Strong move yesterday. First, we had a good move. Yesterday, we had a good move the day before after China has come out with some stimulus. I got some calls, and we faded from the highs. Look, we hit the 192.50. We faded. Well, yesterday we gapped up just like we did the previous session, and not only did we not fade, we continued to rally, a huge rally up to 198. The 195 calls were 30 cents in the morning, 50 cents the prior day when we entered them, traded up to over $3.80 yesterday. An enormous move. I think Bob is going to continue to the upside. I think 200 by the close tomorrow. Certainly not out of the question if Amazon cooperates. So to me, it looks like this pattern here is a starting for a move back to 200. And then ultimately up to 210, 212 to new record highs, and this trend line resistance. Continue to remain in calls here for Vitamin Shop. I feel really good about this reversal here to the upside. I think it's going to head back over $10, but I don't want to get too ambitious ahead of their earnings report in a couple weeks. However, the earnings report this morning from GNC kind of bodes well for earnings for Vitamin Shop. Same store sales starting to look a little better. GNC is up almost 10% this morning. I think Vitamin Shop's going to have a similar move. Vitamin Shop, much better company than GNC financially. They have $120 million in debt. GNC has $1.2 billion in debt. So almost 10 times the debt for GNC. And guess what? $50 a share in revenue for VSI, $36 a share in revenue for GNC. So Vitamin Shop, a lot healthier company. I think it's going to turn it around. And even if GNC rallies, Vitamin Shop can also rally. They were both in the 50s and 60s a couple years ago at their highs. Not to say that's what's going to happen, but $15, $20 a share in the short to medium term for Vitamin Shop, assuming they can really turn this boat around, which the price action is starting to show. Certainly not out of the question. Finally, one other chart, TLT, the bond market. Got into some puts earlier this week. I think we're headed back down here for TLT. See, we came down to 116 and bounced. Came back to 116, bounced again. Ultimately, I think we're going to come down to this 112.50 level. And that's going to bode well for the puts that we got earlier this week. A lot of earnings tonight. Of course, we have Amazon. I'm not even going to get into the charts. Amazon hit new all-time record highs yesterday. Pulled back $30, $40 after the Facebook's collapsed, the face plant. But obviously, Amazon, if we get a 10% move to the downside, it's certainly going to weigh on the market. So you don't want to get too much risk here into the end of the week. But I do think the odds are, especially after Facebook's flop, that we actually see a break to 2,000 for Amazon, continuing to defy. And you remember, go back, man, you can go back 5-6 years when it's a $200 stock. Go to Seeking Alpha, go to Twitter, go wherever you follow, the blogs and the pundits talking about how overvalued Amazon was, and continues to the upside, and still going after all of these years despite being called overvalued. And so, the price action does the talking, not the negative bears pieces. Same with this market. As we head to highs, so many people like to call a top, and yesterday, another day when the Nasdaq hit a new all-time record high, the top callers wrong yet again. And there will be a day when this market pulls back, and perhaps the cracks are starting to form. I agree. It's going to be a great short, this market, when it finally does roll over. But I don't think that time is precisely here yet. And I've talked about it. You can look at the link I put up at optionmillionaires.com, an article I wrote, When It's Time to Sell. And as a great indicator that has preceded each of the last two recessions and collapses, the internet bubble, the financial crisis. And even when that signal is triggered, which it hasn't yet, you still have 4 to 6 months to get out and position yourself for the downside. UPB, optionmillionaires.com. I'll see you in the chat room. Have a great day.